Now you're starting to see them all go. So now you're left with this question of, right, 98 then. What are we going to do up here? We've just zipped down there and zipped straight back to 96. Is that having created that little range, we've now traded down and then back up. So this is where we might well see that breakout opportunity. Now you can use this pocket of low volume where we've jumped up through to try and add on. This week, we're going to look at something a little bit different. We have recently covered the order flow part of the 6-week course. And so I thought I'd give you a little bit of an insight into what's gone on. And one of the things that we were talking about, which was actually going and playing a trade in the S&P during one of these sessions. If you want to know more about the upcoming 6-week courses, link below, click on that to find out more. Come join the webinar. But what I'm going to show you today is one of the trades that we were looking at. This was on the 2nd of September and it's an S&P reversal trade. Now, the chart that you can see just on the screen here gives a little bit of the rationale of the trade. What you're looking for is a reasonably straightforward reversal trade. Now, the rationale behind this is that we've had a sell-off during the ETH extended trading hours. So this is before the New York Stock Exchange opens. This is the big sell-off that you can see on the right-hand chart with the boxed profile around it. Now, the idea here is that this creates short positioning. If the market does not keep going, it is susceptible to a turnaround. If we fail to keep going below that ETH low at 87.5, as the market comes back above it, you can then buy and play the reversal trade back up. In the upcoming video, you'll be able to see exactly how this trade was taken on with the explanation behind why I'm looking at doing things in a certain way, how I'm approaching taking the trade on, where targets are, where stops are, what the reasoning is for entering the trade. What I'm trying to work out is, right, well, what's the current range? And what I mean by current range is, well, where are we really trading? Essentially, we're trading up and down between sort of 88 and 83.5. This is what I would classify as my opening range. So what we've done since the open, which is just here, so we've gone 98.5 straight down towards 83, and then we've had a little bit of a bounce back. So at the moment, we're holding below 87.5. So in doing that, we are now setting up the potential for a bit of a break towards the downside. So one trade early on here that you could be considering is the break through 83.5, continuation down. Alternatively, the break above 88.5, which is also getting back through the overnight lows, and that then setting up the reversal type of movement. So it's starting to see NASDAQ starting to bounce. S&P now, what we want to see here is that the buyers can hold this. So you want to see these bids keep on coming back, and they didn't. So that's not really what you want to see. And this is now still a game of waiting. You don't need to rush in. People are often so fast to sort of go, oh, well, it must be this, it must be this, it must be this. They jump in. There you go, 200 lot order. So that's good to see. Did that trade? Yep, that traded. So we're now starting to see someone just got filled 200 lots on the bid, about 87.5. They got 250 on the offer as well. So I've seen this happen a fair bit. It's some kind of algo that does this, I think. I'm not entirely sure what they're trying to do. But one approach, if you really want to be trying to sort of get into this, you've decided you want to buy it. You've got this area. We keep rotating down to around 86.5. Now, for me, that's probably not enough. Now you've got 500. That's traded as well. So someone seems to want to buy this. So I'm looking at this now thinking, right, there's definitely a willingness to buy. The NASDAQ's on the way up. This is where you can now start to have a go at buying it. Everything's now starting to tick up. We've seen that buying come in. We've seen it come in. We've seen it come in. So now what you're thinking is, right, can we get back up towards the open? That was where the move originally came from. We've now seen the buying. We've got that structure to work from. Now you're looking towards either the open or beyond. It depends now on what you want to try and play for. If you're going to go just straight forward to the open, That's fine. You could go up to here, maybe 96.75, which is a little low before that. If you get beyond the open, then you're looking 02.5 and 04.5. If we can get beyond those, then we've got a more significant move. Now, one thing you have to appreciate is this isn't going to just straight line it. It doesn't have to. You've got some things in your favor. NASDAQ's pushing through highs now. So the NASDAQ is the equivalent of up here. The market that's causing you a problem is the Dow. The Russell's now near highs. The Dow's not. The S&P is struggling as well. So if we can get the NASDAQ up, get the Russell up, then that's going to help us with this. And so now it is essentially a case of, right, well, it's a bit of wait and see. I don't think there's enough here. And I know some people say, well, you could just scalp it. You could just take your profit up here. I don't think that's the trade that you're looking for here. If this is going to fail to break that VPOC, then this is potentially setting us up for a very, very large reversal, or at least a decent looking reversal back to let's say the 19 would be my main area to be looking for. I've got about 07 and then 19 as my main targets here. So what I don't want to do is go, oh no, let's get out for 5 points when you've got all of that scope on the upside. Now starting to see Russell's pushing highs, NASDAQ's pushing highs. So getting back through the open here gives you that sense that we have tried to go down, we have failed to go down, and we're now looking for that movement up. And this, you'll probably notice I'm not focusing that much on the order flow at this point in time. You can see it from your footprint as well. The low that we're pulling back to, sort of 90.75, we're sitting in a bit of a range. If you can get above 95, then that's where we can then start the next leg towards the upside. So let's see if we can do. Starting to build a bit of volume up here as well, which is good. Then you start to see that buyers are coming in again, 95.5. There you go. You see a little bit of absorption there, and it flicked through the absorption. We're starting to see a little bit of a tick back down. But the absorption was coming in there around about 95.5. And still you see NASDAQ pushing highs. It's the Dow that's really, really causing the problems here. And so what you're looking for is essentially if the NASDAQ and the S&P can get through their highs, Dow can't stay down. That may well then play catch up, which will allow these two to continue higher. And there's a temptation to get out. And if you get out here and you take that, that's fine. But now you put yourself in a difficult position because now you're out of the trade. You're forced to now get in at probably a less favorable price. And that's one of the dangers that people fall into. So to try and illustrate the trade there, you get out 95.25. Now what are we left with? You're left with a profit. Great. But where are we going to go from here? Your choices now are somewhat limited to either buying as we pull back down to say 88.5 again, or you're going to try and play the break towards the upside. So this is the way that you've got to try and sort of look at this one of, well, where do I want to go? And you'll notice here, I'm really not focusing on the charts now. The reason I'm not focusing on charts is I don't need to. I know where my levels are. I know that I got a level down here, this 88.5. I know where the open is. So they're really my sort of two key levels. If I was to draw essentially what the S&P's done, we came down, we traded 83, 88, 83, 88, up 95, 96. We're now starting to come back down. There's your 90s. So I know what my levels are. I know that I've got a level here, 88.5. I've got the low. I've got the high of the cash. I don't need to be staring at charts anymore. I know where my levels are. I also know what I want to do. I don't want to be buying it down at 83. If this gets through 88, I think we could then start considering further movement towards the downside. If it doesn't, you could then, if you want to have a very quick go at this, you can have a go at just getting your bid in, see if you get a reaction. But if you don't get a reaction pretty quick from here, I'd be starting to get quite nervous. So if you want to trade this as a sort of scalp, You could just go, right, quick scalp towards 91 and three quarters and be done with it. If you want to play this more directionally, then you get your stop down at 86 and you then try and hold on to this. Now you're starting to see them all go. So now you're left with this question of, right, 98 then. What are we going to do up here? This has been quick. You look at it on the footprint, it's been very, very, very quick. Now you want to see some accumulation. You want to see some people starting to buy at prices that we haven't really been buying at before. And we really struggled when we got to 96 previously. So getting above there, you see them coming in, holding that. Getting above here is the chance to go up. And again, it gives it away. So if this is giving it away now, really don't want to see it back below 93. So we're looking then stop at 92, probably not looking great. But you see, there's definitely a bit of absorption there. You see people continue, you get that volume getting done. Yeah, this is why I don't want to just place a stop. So if you just place a stop, you get flicked on that and you're out now at 92. But the way that you saw that absorption suggests you don't need to get out. It was definitely sticking there. It's not a great position, don't get me wrong. I certainly wouldn't be happy. But if you're not breaking through there, then we're okay. But I think you've got to be quite aware that now it doesn't look good. You're going to have to give that one up. And so after that first sort of moments of excitement, if you will, what you then have to do is take a little step back. It doesn't seem that it's too clear on where it wants to go just at the moment. So in terms of being able to draw that, and I'm not drawing this looking at a chart. We know what we've done. We've done the 98. We've done that bit. We've then done the phase up, back, up, and now we're kind of stalling here. That's what we're doing. So it doesn't mean that we don't have direction yet, but it certainly doesn't mean that we've got any clarity. So I think you're still in a position where you've got two trades now. You've still got the break of 98.5. So this is 98.5. And then that gives you the move up towards 19. And then you've got the break of 88.5 or 87.5. And that gives you the move down to 63. So you've set your stall out. We've had a little go early on. That's not developed into anything particularly of note. And so now you're very much in this waiting game of what do you do here? And this is where you wait and you work out and you think, right, well, what am I going to do if indeed we do break? Is this enough? Am I seeing sufficient action up here to have a go at buying it? We bought it up here before and it didn't work. So then you've got to decide, well, are you going to go for buying it here where clearly people did stop it from going back through the open? Or are you going to wait and say, well, I'd prefer to give up a few ticks of entry and get in above 98, bearing in mind 99's a level. So 99, just to show you on chart. So here's your chart. That's there are your 99s, this little area here. So the fact we've opened right on it and gone straight down, if this does break, I think it does set up some decent scope on the upside. So the trade is there. And so I'm looking at that thinking, well, actually, I probably don't want to be buying the break of the mini range on the upside because I'm now at a point where I'm so close to the big level. I'd prefer to actually get above that before I'm going to go and have a go at it. Now, on the iceberg, we saw someone iceberg around about 87, 88 last time. So what you want to see is, are you getting the same again? And you are kind of seeing that. You see there, again, it comes down and all that volume gets done there. People are continually buying and buying and buying and buying down at that 88. It's too slow in getting in on that. But it's offered you again that really, really clear reference point. And the thing that you pick up from order flow, and just by watching the ladder rather than spending all your time watching a chart, is you pick the levels that really matter to you. For example, the 88.5. For example, the 96, we just zipped down there and zipped straight back to 96. So this again is another rejection that came from that absorption down there. And if you could really have scalped this, like 88 to 96 is really, really, really easily here. And now we want to see, can we get up above 98? The difference this time is that having created that little range, we've now traded down and then back up. So this is where we might well see that breakout opportunity. But again, it rolls back. The opportunity you have got now, remember in that previous little zone where it traded sort of 95 to 92, is whether we can find some support here. Can we start to see that buyers actually try and hold it here and try and get long at 96? Because if we get that, then we've got the chance to go up. I think you might be seeing that a little bit now. There's still certainly, you see all the green, which is where you're seeing people buying into the offer, buying into the offer, buying into the offer, and it's not going. So be very cautious here, particularly if this doesn't start going pretty quick. What I'm looking for now is that we're going to jump over 99. This needs to be quick through here. Don't want to see this slow. So this is your classic type of breakout. Once you've got that, then we can start thinking, okay, well, now you've got back through the open. Now you can use this pocket of low volume where we've jumped up through to try and add on. And in doing that, then you're setting yourself up a little bit more to be able to play continuation. I've got a level at 5 and then I've got a level at 19. Get your orders in up there, and now we can try and play that. A lot of it's just about building that picture up from what you're watching. But what we've got here then is a situation where now we do seem to have some momentum. This is a market that now seems, when we bring it back onto a chart, to have actually decided where it wants to go. It's traded down, it's traded back up, it's traded down, it's traded back up. Now it's broken out of this range. The aim then is, well, can we get back through this whole range towards the upside now? And there's very little stopping you through this little area here.